what do you like about this bank at this moment?
At this moment, again, what they did today was they actually shored up their balance sheet. They took additional reserves. They've really built out, a fortress that can withstand a recession if it does indeed come. But what they also have is, and you saw that with Morgan Stanley, they have exposure to the capital markets. They have exposure to Main Street America. And we think they are the best franchise and also the most attractively valued stock. Now, Citi, you had the Citi CEO on earlier. Citi's a very inexpensive stock, but we don't love their positioning as opposed to JPM's.
And where do you see opportunity then, Doug?
We see them as actually, for JPMorgan, the opportunity we think there's significant upside, especially because we're not as convinced of a severe down recession. One of the things we think that the upside is probably being underpriced. We think that there's sufficient strength there. And we also think that these additional reserves, you've seen they came in under on like non-performing assets and bad loans. They're reserving, but they may actually end up releasing these before having to take them, assuming we don't get major defaults and we don't get a major either geopolitical hit or a major economic hit of the Fed pushing it sort of even past the 5 level. You're starting to hear talk of that. And that to us seems unlikely.
But you just mentioned 3 things that if they happen, they could scramble all the eggs, right?
Oh, yeah. It's funny. Jamie Dimon, I think a week ago, talked in Europe about the market could be down 20%. Well, yeah, it could be. It could be off 20%. Do we think the odds of it being down 20% from here a year from now or up 20% are the same? No, we think that there's probably a 2-to-1 odds in favor of the market being sufficiently higher, so sufficiently above the 4,000 level on the S&P next year, relative to it being down below 3,200.
That's something to look forward to. I mean, that's good. I feel better now.
Christmas comes early.
Doug, I like it. I like this. I mean, let's talk. You just mentioned something that was sort of interesting to me, and that was while Citi is well priced, you don't like its franchises as well as you like the franchises, or I think that's maybe my word, not yours.
Yeah, I think.
So what is it about Citi that makes them less desirable than JP?
I think Citi's more exposed internationally, probably, and we're still not sold on necessarily a huge European recovery, a huge South American recovery. You've seen really, really poor performance out of Latin American countries. I also think, again, JPMorgan has a better positioning in the capital markets. They have much deeper penetration in Main Street America. So I think that outside of Bank America, which right now doesn't have quite as great a balance sheet as JPM. Look, we like JPM the best. And they're the only bank we currently own in the portfolio.
Okay, so let's talk about other stocks then. I see you like Merck and you like NextEra Energy. Want to run through those quickly?
Sure. Merck, it's got Gardasil. And it's done fantastically with its core franchise. But what we think is really undervalued is sort of the animal health franchise. The vaccine franchise is actually, we also think people are wildly discounting that.
Okay.
And we think that that's undervalued.
And NextEra?
NextEra, it's that, look, the renewables piece, we think you're getting that right now. We think the core utility business is worth $50 to $55, probably $53, $55. Stock's trading, I don't know, today. Yesterday it was trading at like 73. We think the renewables portion of NextEra is worth somewhere between $40 to $65.
All right, and there you're seeing it trading at 72 right now. Doug, thank you for that. Appreciate it.
All right. Thanks a lot.